Order blocks are the easiest and most beginner friendly strategy you can learn when it comes to trading smart money concepts and ICT. In today's video, I'll be fully breaking down what order blocks are and giving you guys a full trade plan for the order block strategy. If you want this video to work for you, please make sure you watch this end, because once you know what you're doing, you can easily catch 1 to 10 risk reward trades. An order block is a zone in the market where big market participants such as banks get involved in the market. Price is attracted to these zones because institutions need to push price back into the original zones to mitigate the losses. So essentially, think about, if the banks want to get involved, they need to create something called an order block. Essentially, all an order block is a blueprint or a trail that the banks are leaving behind that we can follow to then enter where they are mitigating the losses. Now, when it comes to identifying an order block, it is very, very straightforward. All an order block is the last down or up move, depending on if it's a bullish or bearish order block, before price shoots up or down, breaking previous structure, okay? It's as simple as that. If you look right over here on the left hand side, we have what we call a bullish order block. This is a bullish order block because we have a zone here. Price shoots up. This is the last down move before price shoots up. So this would be the last down candle if we want a 15-minute time, for example. Price shoots up, break structure. I'll clarify the exact criteria you need to make sure an order block is valid, but right now I'll just give you guys a quick explanation. And for a bearish order block, it is literally the same thing. The last up move, because now we're looking for sales. The last up move before price shoots down, break structure. Price comes back into our zone and we enter off of this zone right over there. Now, for the pairs and times you can trade order blocks, a lot of people do get confused on, because order blocks are a very, very broad strategy. The times that you can trade order block is essentially any time there isn't a set criteria you need to wait for order blocks to happen. Yes, order blocks do react more in volatile markets like London or New York, but you can essentially trade it anytime. It isn't a time-based strategy, meaning you have to look for certain market open like the kill zone. You can essentially trade it whenever you want, 24/5, if the markets are open. And for the pairs that you can trade it, essentially any market you can trade this on. You can trade this on Forex, commodities, crypto. You can trade this on whatever. If price is manipulated by the banks or has a high amount of volume or is fundamental like crypto, for example, that means you can trade it. It doesn't mean you can trade new crypto coins like a coin that came out 2 hours ago and has a market cap of $1 million. No, you need to trade markets that do have some sort of institutional involvement. Now, getting actually deep into the order block criterion and how we can make sure that an order block is valid. Well, the first thing we look for, as I mentioned previously, is a break of structure. In order for our zone right over here, which is a bullish order block, to be valid, we need to have a break of structure of the previous high, because we're long in the market, to make sure that this order block is valid. If we don't have a break of structure of this previous high, this essentially means there is no confidence for the order block, because we could just go down. We have no confidence that we want to continue this bullish trend. The next thing we need to be sure of is that there's no mitigation in our zone. Now, if you don't understand what mitigation means, it is very, very straightforward. Mitigation essentially means when price comes into your zone and plays around it. Once price has hit your zone, you cannot take any trades off of that zone. Now, don't get me wrong, you can trade lower time frame entries, which is something I'll break down in another video. That's when you enter off of the lower time frame. So you find your higher time frame order block on the 15-minute, and then you go on the lower time frame. Apologies, you go on the lower time frame, and then you enter off of 1 minute order block, still in that same zone or a little bit outside of it. But something that's very, very important is that there needs to be no mitigation. By that I mean, if price shoots up, breaks structure, then comes back into your zone, you're not going to look for buys or sells, because price has come back into your zone, meaning that the trade has been mitigated and you don't want to look for any buys or sells. The third one, which is probably the most important one when it comes to confidence and picking the right order block, is make sure that there's no opposing liquidity and there is volume when it comes to your break of structure. Now, previously I said an order block is a zone where the institutions are involved, okay? If the institutions are involved, do you really think they're going to move the market in a small way or a big way? It's very straightforward. If institutions are involved, they're going to move the market in a big way with big volume and very big candles. It's as simple as that. So the break of structure that we are given, we want to see it with a strong amount of volume pushing up, in this case, because you are taking a bullish order block, or for a bearish order block, we're looking for a very, very strong break of structure to the downside. And also no opposing liquidity. This means that you do not want a liquidity to oppose your order block. You can see here we have some equal lows right over here. Because our zone is right over here, it is a very, very stupid trade to take, and it most likely won't work. Why? Because liquidity is against our trade. There are some equal lows right below where we want to enter that the order block can come and simply, that price can come and take out these equal lows, because our order block is also in this zone. You want to make sure that liquidity is in confluence with your trade and not opposing your trade. Also, one quick thing I do want to talk about is what order block to pick, which is like a little extra secret I've given you guys. Now, if you quickly look at this example I've given you and tell me which order block would you pick, which order block would you enter? Again, it's not a right or wrong answer, just based off of confidence, which order block would you pick? Number 1 or number 2? I'm going to give you guys 2 seconds just to quickly pick. So you've had your time. The answer is number 1 right over here. Both of these are completely valid. You can see they both have a break of structure. They both have a large amount of volume. But the one thing that this one has that this one doesn't have is opposing liquidity. This order block number 2 has opposing liquidity right above it, meaning that price is much more likely to come, take out this opposing liquidity and then tap into our zone, then take the market short. Okay, this order block is also much better because we have taken liquidity before our actual zone. One thing that's very important that you want to make sure you do is you want to make sure that your order blocks take liquidity. It's not an important step, but it's a very important one if you want to add confidence. A saying that a lot of people do say, just to sum up this whole thing about liquidity, is if you don't see the liquidity, you become the liquidity. I know it sounds very cliche, but it's literally as simple as that. Now, what I'm going to do is I'm going to go on the live example and break down a live trade on a live chart, showing you guys how exactly to catch order blocks. But before I do that, if you're looking to get funded completely guaranteed or you don't pay us a single penny, make sure you check out the link below in the description. We will pass your funding challenge completely guaranteed, or you don't pay us a single penny. And the best part is you only pay after we pass your challenge, meaning that there is no risk that will blow your account or run away, whatever it might be. We will only take payment once we pass your challenge. Not only this, you get some very nice signals. Again, this is the signals that I called out personally. You can see I called out a 1 to 5 risk reward. That would have been 5% on your funded account if you held that trade. Not only that, you can see we have our clients getting payouts using our signals. We have clients getting funded every single time. But if you are interested in getting funded and also having some very nice signals, please make sure you check out the link below in the description. Alright, so I'm here on the live chart and let's get right into the breakdown. First things first, what we want to do is mark our order blocks and check if they are valid. I can see roughly 3 order blocks here. We have one here, we have one here, and we also have one here. This is just a quick analysis on the higher time. Okay, we have 3 order blocks here. Now, all 3 of these order blocks have a break of structure, but what other confluences can we look for? Okay, first thing I see is we have some equal lows resting right below here, meaning that we have liquidity in confluence with our trade. Not only this, you can see if I go drop down the lower time frame, this trade right over here also has liquidity that has been taken beforehand, this low right here. Now, out of all 3 of these order blocks, I think it's very clear which one we will be going for. All of these have a break of structure, as you can see. This one's break of structure is here, this one's break of structure is here, and this one's break of structure is this zone right over here. So essentially all 3 of these have a break of structure. They don't all have liquidity in confluence with the trade, but they also have a high amount of volume breaking that structure, as you can see right over here, and this one especially has a high amount of volume. Now, when it comes to entry, there are a lot of ways you can enter an order block. One thing, which is probably the easiest way you can enter, is you get your Fibonacci tool and you mark it out like this. Now, when it comes to entering, you can do what I do, which is I enter off of the 50% like this. Stop loss is right over here or just below this low right here. You can enter here off of the order block open, the candle right here, but you can also enter off here. Again, it's completely up to you and what you personally like. This is how I usually enter. Now, one quick tip I just want to give you guys: if you enter with this and obviously have a smaller stop loss, you are more likely to get stopped out, but the risk reward you see will be much better. Now, if I quickly play the market and show you guys what exactly had happened, you can see, where is it? We are tapped into our trade right over here. Now that I've tapped into our trade, the next thing we want to look for is confluence and where exactly we want to exit the market. Okay, we're tapped in. Now, in regards to confluence and the points where we can exit the market, there is this zone right here, which is opposing liquidity. There is this high right over here, we can exit the market. If I go on the higher time frame, like the 30-minute, what else can I see? I can see we have an order block right over here. This whole zone here essentially in confluence to high, and also this other zone here, big imbalance resting right over here. Any of these zones are fine. What I'd recommend you do is you target one point of liquidity, obviously take 25% of your position out, and then go on until you're happy with your trade. You can see this is what I mean by you can catch 1 to 15s, 1 to 25s. I'm not sure if it played out for 1 to 25 because I took my take profit fairly low, which was right over here. Actually it was here, but if you let it play out and you do get fortunate in your trade, you can get some very, very big trades. If I played this out so you can see, bam, my take profit, apologies. My take profit has been here, as simple as that. Now, if I play the mark out just so I can quickly see, you can see you could have even targeted here for 1 to 9 risk to reward. See if the market decides to push even higher, and you could have, oh, you can try there. If you were to target even higher, you would have been wicked out if you wanted to target a 1 to 14. But if you went for low hanging fruit like these go highs and this high here, you would have been complete. Okay, you can see the wick right here would have taken us out of the market right here. Again, the lower your stop loss is, the tighter it is, the more likely you are to get stopped out. But this is the end of the video. I do hope you guys did enjoy the trade breakdown. If you do have any questions, do let me know in the comments below, and take care.